Now for business updates across the globe, Rotus Udiri joins us. Good morning, Rotus.
Good morning, everybody. Short on time, we'll have to speed through everything. Asian stocks falling because of 10 cents, because of interest rates in the US, because of China. So they have been, I think they're at a 9-month low. It's been really terrible. To get to China, investors are selling off their securities. I'm going to get to Nigeria in a second. 7.4 billion in equity since July. 5 billion in bond holdings since the same July. They're saying it was accelerated in August. China is just not talking. Here's a quick quote from Mohammed Apabi with Citigroup saying that, very quickly here, that the measures taken so far by Chinese authorities appear to have disappointed the market. There is increasing frustration and concern from foreign investors about the lack of any solid policy action. Move to Japan. Exports falling in July, particularly because of weakness in China. 0.3% contraction year on year. Forecast was a contraction of 0.8%. It did climb in June, but look at the exports to China. China impacting pretty much everybody around them because of their large demand. We move on from that to Europe. No one is talking about Carlsberg and how the Russians seized their assets in Moscow. They just took over them. Anyway, net income dropping by 5.5%. They still beat estimates. But let's quickly get to their CEO and his comments. Or rather, before I get there, look at this. So this is their loss on Russia operations, almost $60 million. They're saying they're going to explore, I don't know, legal options. If we take a look at the quote from their deceased, Harman, I think is his name, the CEO of Carlsberg, which is one of the biggest breweries, companies in Denmark. We're assessing the situation and the legal consequences of our Russia assets being seized by the Kremlin. We will seek to protect our assets and the value of the business. Dear sir, I don't think you have any chance of getting those assets back. We move on from there to the Federal Reserve minutes. Pretty much the summary here, they are concerned over inflation. More rate hikes could come down the road. Markets fell because more tightening has its own impact. Coming down to Africa, the $3 billion loan that the NNPCL secured from the Afro-Exim Bank. Very interesting, no interest on this loan. Emergency crude repayment, payback via future crude proceeds. So earnings from your proceeds in the future you will use to pay back. There are no sovereign guarantees, so no liability pressure on the federal government. We're going to use it to settle taxes, royalties in advance, and they're saying the dollar liquidity will stabilize the Naira. The only worry here is our production is so low already. How do you then? And then we had a military general who was president for 8 years, and somehow he couldn't do anything about oil theft, right? So that's impacting us. Naira appreciating in the parallel markets. Why? I don't know. I really do not know. Nobody told us anything about what was sold into the market because it's supply-demand dynamic. Some headlines are saying it was because the central bank warned speculators. Really? Anyway, let's go to now. I said this happened. I told everybody this would happen yesterday. That terrible decision to reinstate fuel subsidies. Nigerian Euro bonds worst performing on emerging markets over the last 2 days. That's for the August 15 and 16. The January 2031 bonds suffering their biggest drop since March. September 2023 bonds, biggest drop since July, according to the Bloomberg Emerging Market Total Return Index. I said it, investors have responded because of the president giving in to this, what I call neo-welfarist ideologies. I want to destroy the fiscal structure of the state. But just to explain this a little bit more, just so people are not talking too much here. This is what happened on the right is what happened to our Euro bonds. Bond yields have an inverse relationship with bond prices. When investors get worried about Nigeria's ability to pay back her debt, they sell your bonds. And when they sell the bonds, the prices go down. And when the prices go down, the yield goes up. And when the yield goes up, your bond becomes more expensive because, hello, Euro bonds are priced in dollars. So congratulations, we have increased Nigeria's dollar debt. However, on the left-hand side is what happened when the president put in those reforms. Bond yields went down. So it's going to oscillate, but for now, investors are not liking what they've seen. Mark Coran, he's with Telemere. Let's take a couple quotes from him on what he was responding to in London. He said, after rallying sharply on the back of Tinubu's ambitious reform shift, the reality has set in that the next stage of reforms is likely to be much more difficult. And why are reforms difficult? They're difficult because of resistance from the socialists and the neo-welfarists. Patrick Coran, he continues saying here, and this is where the numbers get gritty. He says the FX liberalization process has hit a bump in the road with an overly loose monetary policy stance. Now, don't get confused and think that we've been tightening, and he's talking about loose. He's talking about interventions and other actions there that have boosted money supply, impacting inflation and so on. Continued monetization of the budget deficit. Nigeria's budget deficit for 2023 is 12 trillion. 12 trillion. And some people think that's just money in the sky. And the re-emergence of a large parallel market premium. What else? The ministers, just to give you an idea of where we are coming from, this is a chart from Morgan Stanley. They released this note this month. They said Nigeria's economy has been in reverse gear under Buhari. This is a change in per capita GDP that impacts the wealth of citizens in our dear country. 37% drop between 2015 to 2022. The Kenya were all praising yesterday for removing fuel subsidies. Their per capita GDP appreciating by 40%, Rwanda 28%, Egypt 23%. As for the ministers, no one is talking about how the ministers are going to impact IPOs on the NGX. It's very interesting that no one has said that. Each minister pretty much has a portfolio, and if they have an eye towards the NGX and wanting to get more IPOs, that is more, if we look at the ministerial impact on the IPOs, essentially, if I am Festus Keyamo in aviation, how do I get airlines to list? If I am in tourism, Ayo, you were talking very much about tourism. The tourism is not going to go anywhere unless insecurity is addressed. And for any minister that wants to implement anything at all, you need money. But when you have a 12 trillion Naira deficit and you've got 95% debt to GDP, revenue to debt service ratios, good luck getting all that done.
Thank you very much, Rotus. I understand we don't have so much time, but very interesting issues you have raised.
Indeed.
It's not only the July meeting minutes in the US saying rates will be hiked. Even in the UK, despite inflation coming down to 6.8%, the Bank of England is saying that there will be further rate hikes next month.